Hello, I'm Brent Wilsey with Wilsey Asset Management, and welcome to today's Smart Investing Daily Briefing. As you can tell, Chase is on vacation today and tomorrow, so we won't be back till next Tuesday, I think is when he returns. But today we're talking about how strong is corporate America. And I want to point this out, and these are S&P or Standard & Poor's 500 companies, because what happens, a lot of people say, oh, things are terrible and so forth. So again, we're going to point out how strong the average companies are. We can see right here, 29% cash of their current assets. Now, when you compare that to 2008, what everybody thinks is a very strong time, it's only 20%. So companies are very liquid right now. Also, we see the operating earnings per share are 8% versus 5.5% in 2008. So things looking pretty good there. And I also want to point out that share buybacks are $150 billion, and dividends over the last year, $145 billion. So on top of this cash being very high, the companies are using this cash to give it back to their shareholders. So try to find those companies that have share buybacks and also increasing their dividends. Speaking of companies, let's look at the company today, which is Bebe Stores. And I picked this company, it's kind of what I call a special situation. As you can see, back here in 2012, the stock was well over almost $9 a share. 52-week high is $2.16, the low 29 cents. Right now, 55 cents. You can see how far the stock has fallen over here. But let's look at some numbers here and talk more about Bebe Stores. They do women's apparel. They have 150 stores, about 35 outlets. And my girlfriend loves this store. They got some great outfits and so forth. So it's a great store to look at, but they're having some problems. This could be a buying opportunity. Sales are down 6%, earnings per share down 31%, but here's where it gets pretty good. Current ratio 2.1 and zero debt on the balance sheet. There are no creditors trying to force this company into bankruptcy, so what they can do is they can have time to turn things around. This is where you have to look at the company to see, can they turn things around? Do they have potential to turn things around? Because this may be a great buy for you. Also important for companies are how they're doing the receivable turnover. 55 versus 27, that's very good. Another problem businesses have is inventory turnover. 8.5 versus 3.3. So in a special situation, a high-risk situation, you can buy this company right now for around, 29, 30 cents or so, about 50 cents right now, I think it is. About 55 to 60 cents. Could be a great buy, but be careful, watch this closely, because it also could go into bankruptcy down the road. They can put themselves into bankruptcy. But again, I just love that no debt on the balance sheet. All right, so let me ask you, are you happy with the return on your money, on your investments? Maybe you're just not happy with the return you're getting from your advisor. Maybe he's not giving you good information and so forth. Well, that could mean it's time to give us a call here at Wilsey Asset Management. We've been managing money for over 30 years successfully. Go to our website, smartinvesting2000.com, or give us a call at 858-546-4306.